Life Insurance Secrets Revealed by a verified advisor, Javaughn Spencer here. We're going over accidental death life insurance. Like accidental death life insurance, very common, very inexpensive. That's one of the highlights with accidental death life insurance. The reason it's so inexpensive is because of the risk factor. We don't know how we're going to leave this earth, so the insurance company is betting that you might not leave this earth due to an accident. Accident is anything that's not health related. So this is ideal for families that just want an extra layer of protection. I like accidental death for younger people and seniors. It's really just a great added protection because we just don't know how we're going to leave here. It's cheap. It's $500,000, less than $100 in most cases. They don't ask any medical questions because it doesn't matter if you have any medical concerns. So that's another big thing with accidental death life insurance. Who am I? My wife and I, Bridget and Javaughn Spencer, located in Beaufort, South Carolina with our 2 sons. My social security number for life insurance. So this has my national producer number, my contact info, a few of the companies that we represent. Bridget and I, as you know, own our insurance brokerage and we partner with all these companies. So we're able to help everyone all across the country. So I really want to start, even though we're talking accidental death life insurance, there are 2 types. You have your term type of policies, which your accidental death is aligned for that term, whether you have it as a accidental death policy for 10 years, 15 years, or on the permanent side, it kind of goes up to age 85 with most companies. So just be mindful if your accidental death life insurance policy is on a term vehicle or is it on a permanent vehicle. Now you see accidental death life insurance really big in banks and credit unions because it does not require anyone to actually see you, touch you, or anything, because if you don't pass away from an accident, it's not going to pay out. So it's really a big upsell in the banks and credit union world where they're like, do you want to add life insurance to your account? Well, guys, if they're not asking you any medical questions, if they're not asking you any height, weight, if they're just getting your name, date of birth, and social, that is 9 times out of 10 an accidental death life insurance policy. I can't tell you guys how many times people have thought this was a full life insurance policy until they're on their deathbed and they realize this is not going to pay out. Right? $100,000 for $10 a month at the age of 50, that is accidental death all day long. Okay, and you just really have to read the policy. They usually put accidental death really small and life insurance really big. Just be very, very wary of those, but you'll see it really, really popular and inexpensive with your credit unions and your banks. When I customize plans with clients, I go over all of the benefits, but if you always notice, we keep accidental death separate from death benefit, because I want you to know that if death does not occur by accident, that additional benefit is not going to pay out. That's the accidental death. Okay, it's just going to be the death benefit. So it's great to do combinations. It's great to do combos where you got the death benefit that covers any death, and you have the accidental death that gives the family extra money if death is by accident. We've seen and heard of countless stories where that one accidental death policy saves someone's family from losing everything, because when accidents happen, it's usually not planned. Obviously, when someone's sick, you kind of see that coming. They can get things, arrangements in order. The family's prepared. Someone get into a car accident, that income is gone immediately. Those larger policies are definitely necessary for that. Slip and fall is the 4th leading cause of death in the country. Accidental death is cheaper to have it and not need it than need it and not have it. But this one is what I call a profile for this is more like a senior, someone 70 and below, someone who, again, we don't know how we're going to leave this earth, so it's just a death benefit with terminal illness as the living benefit. But if death is by accident, if someone falls, falls and then within 180 days they pass away from that fall, that is typically considered an accidental death. they passed away due to a fall. If they got into a car accident and were fighting from the symptoms from that car accident and they pass away a month later, that is considered an accidental death claim, okay? So hopefully you guys understand how accidental death can be used in life insurance, and hopefully we knock that secret out. Feel free to schedule on my calendar. Feel free to book. We'll be more than happy, myself or my team, be more happy to help you and your family. Let's go to the next chapter. See you then.